Today, I want to talk about how hedge fund employees are being fired for failing to provide false data, and how that's likely leading to incorrect shorted share numbers being reported, aka the hiding of the billions of synthetic shares. So stay tuned and let's make some money. But now I'll dive straight in with the key information. So, we can see this article says an ex-Citibank banker says she was fired for refusing to give false data to regulators. Now, Kristen has commented saying, "Trust me on this, Wigdor law is extremely thorough and make sure it has a substantial case before agreeing to take on a client." So it says a former managing director at Citigroup sued the bank and its chief operating officer on Wednesday, alleging she was fired for opposing what she said were attempts to give regulators false information. Now, it's obviously been speculated on for a while now that false data is being self-reported to these regulators because these regulators are effectively self-regulatory organisations. When you report data to these regulators, they don't actually review the data you provided. They just expect you to ensure that you're reporting the correct data and correcting any mistakes. And it now seems that incorrect data is being reported on purpose, even by the largest of banks like Citibank. And if anyone tries to speak out about that false data or tries to report the correct data or opposes the reporting of incorrect data, they get fired. So it says Kathleen Martin, a former managing director that Citibank hired in 2021 to help with data issues, said in a lawsuit filed in New York District Federal Court that her supervisor COO warned her to hide critical information. So this is likely why we haven't seen more whistleblowers or more correct data being reported, because the employees in charge of doing so would likely end up being fired, or potentially worse. And on that note, Citadel has also tweeted about the AMC spoofers and security regulation violators, Wedbush Securities, reporting $4 billion worth of open short positions. So we can see here on the exchange traded options section, the value of open short option contracts is negative $3.9 billion. So I'm wondering just how many of those are incorrectly reported illegal synthetic shares or synthetically shorted positions. And it seems Wedbush aren't the only ones misreporting short positions or mishandling funds, because the short seller Jim Chanos has just been sued by the partner, alleging a misuse of funds. So it seems that's both Wedbush and also Jim Chanos being sued, but remember, it wasn't just those two, because Virtue was also accused of mishandling client funds as well. But anyway, it says here that Jim Chanos, the short seller who made his name and fortune on Enron's demise, was sued by a partner that accused him of embezzling company funds for his personal use and enriching his girlfriend in the process. So it says Conlon Holdings claims that Jim Chanos used his firm as a piggy bank. Conlon Holdings filed a lawsuit, and that suit, filed in the New York State Court over the weekend, involves $10 million of outstanding loans that Chanos borrowed from his company over more than a decade. Conlon alleges that Chanos never intended on paying the company back, but instead planned on using his power as general partner to run the company into the ground, enjoying the tax benefits of his financial shenanigans, and leaving his partners with nothing. So it seems all of these short sellers and these sketchy hedge fund types really are all up to no good. I also wanted to go through two brilliant plays we had in the Millionaire Mindset Trading Group, starting the day with a 150% gainer on LUCY. You can see I told the group in the pre-market saying I was waiting for a pullback to buy LUCY. They released some news earlier and are currently getting their 3 to 5 minute news breakout, but I want to wait for it to consolidate and then pull back, but then buy when it breaks that high. Then when the market opened, I told the group I was buying Lucy as it was breaking that pre-market high but just gave us a slight dip right here, where it then ran over 150%. Now MM44 jumped on Lucy or LUCY and locked in a 33% gain. Again, we've also had some other great gains today, like JR and Treppy Doodle, who locked in some huge gains on PEGY or PEGY. So JR said he's not sold PEGY yet, but here's the current progress when it was topping out today, sitting on a 405% gain. He said, "Thanks, Tom, this is a fantastic group, and just PEGY has paid for his lifetime membership 4 times over." JR put in just $500 into PEGY and has so far turned that into over $3,000. So guys, if you want these kind of daily gains, be sure to join the Millionaire Mindset Trading Group using the link in the description below. And this is why Robert tweeted saying, "Look how desperate they are for your shares. If they want to buy it down here, I bet they would buy it at any price." He said how desperate they are to first try and make you sell and then call you crazy. You may have seen articles like this from Investor Place saying AMC stock is now up 66%. This is your opportunity to sell. After telling us for months and months and months that we should sell at all-time lows, they're still trying to tell us to sell now that AMC is up 66%. Clearly, Investor Place didn't see this 66% jump happening, otherwise they wouldn't have been advising us to sell at all-time low prices. Remember, with investing, the aim is to buy low and sell high, but it seems the mainstream media wants you to do the exact opposite, to buy high and sell at all-time lows. Now, also on that note, you may have seen that Gary Gensler tweeted saying today's trading in the US securities market is on a T+1 standard settlement cycle and will settle tomorrow, saying we at the SEC are closely monitoring the transition to a faster settlement cycle that will benefit investors and take risk out of the system. Now, I do think T+1 is good, and shortening that settlement cycle can only be a good thing, but as Bigums has posted, we should also expect FTDs to rise. So this screenshot says the hope is that everything will run smoothly, but even the SEC said last week the transition may lead to a short-term uptick in settlement fails and challenges to a small segment of market participants. The reason why T+1 is good, or why shortening that settlement cycle is good, is because it makes it more difficult to create synthetic shares, or makes it more obvious when illegal synthetics are created, because it results in way more FTDs and way more stocks ending up on that regulation SHO threshold securities list, because these shorts have way less time to locate real shares or to perform any kind of magic to hide the synthetics. And that's why it will pose a challenge to a small segment of market participants, those ones committing illegal crimes. Now finally, Edward tweeted saying if you don't think they're going to try a fake squeeze, then you've missed the last 3 years of crime and manipulation they've tried to use to get people to exit their position. The mainstream media has told us every single day over the last 3 years to sell our shares because the Wall Street criminals don't want to be obligated to close their short positions at the shareholders' desired price. On top of that, we've expected for a long time now the shorts will try and create a mini squeeze to convince as many people as possible to sell at low prices. Remember, if someone is short, and especially if they're naked short or have synthetic shares, then they're at risk of infinite losses because the price can effectively go to infinity. Obviously, the price doesn't need to reach infinity for a short seller to be liquidated. The position just needs to move against them to the point where they're at a 100% loss. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.